Hi guys, this is Richard from the Stable Center, and today I'll be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. Anyway, today we'll start things off with Wall Street Titans, JP Morgan, Goldman Sachs, and Citibank entering the stablecoin arena, and this time it's not just talk. So with the recent passage of the Genius Stablecoin Act, the first major U.S. law offering clear regulatory guidance on stablecoins, America's largest financial institutions are now positioning themselves to compete directly with crypto native giants like Circle, which issues out USDC, and Tether, which issues out USDT. JP Morgan has already taken the lead, launching a blockchain based deposit token for institutional clients, whilst Citigroup has expanded its Citi token services to facilitate real time cross border payments. Goldman Sachs is building a dedicated internal team focused on stablecoin strategy, analyzing where this technology fits into the future of banking. Meanwhile, Bank of America and Morgan Stanley are moving more cautiously, watching market demand and regulatory developments before diving in. Across the board, the mood has significantly shifted. Stablecoins are no longer viewed as fringe cryptocurrency innovations, but as strategic financial infrastructure. Analysts at Bank of America even suggest that the rise of bank issued stablecoins could accelerate the adoption of Ethereum, decentralized finance, and tokenized payments globally. In short, the stablecoin wars are heating up, and Wall Street's titans are now fully in the fight. So let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like blue and green, represent times of low risk, which are the best times to purchase Chainlink, and the warmer colors, like orange and red, represent times of high risk, which are the worst times to purchase Chainlink. So after Chainlink nearly doubled off the local low set in June, Chainlink's risk level has jumped a little bit to 0.04, which is still relatively insignificant. According to risk analysis, buying Chainlink today is still considered low risk, not financial advice. So let's take things one step further by adding the regression lines. So regression is really just a fancy word used by mathematicians to say lines of best fit. The best times to sell Chainlink is when Chainlink is trading above the red regression line, indicating that Chainlink is overvalued. And the best times to purchase Chainlink is when Chainlink is trading near or under the green bottom regression line, indicating that Chainlink is undervalued. Now, if we combine both risk and regression analysis, we can see that for the entire month of June, Chainlink was printing a pink risk level of 0 under the green bottom regression line. In other words, it was essentially free money. So congratulations to anyone who benefited from the 80 to 90% pump from the June lows. Now, let's talk about an exit strategy here for Chainlink, because at some point we have to exit the markets completely before the next bear market begins. For me personally, once again, not financial advice, once Chainlink starts printing a yellow risk level, which spans between 0.6 and 0.7, I will start scaling out of Chainlink. That is because if we go back to May of 2021, when the price of Chainlink was at $52.20, we had a red risk level of 0.9, and the price of Chainlink collapsed over 90% over the next few months. We can also go back to January of 2018, when the price of Chainlink was at $1.38 and had a red risk level of 1, and once again, the price of Chainlink crashed over 90%. Fast forward to March of 2024, when the price of Chainlink was trading at $21.75 with a yellow risk level of 0.68, the price of Chainlink crashed over 60%. The point I'm trying to make is that once Chainlink starts printing these warmer color risk levels like yellow, orange, and red, it's time to scale out of Chainlink and rotate our money into stablecoins in preparation for the next bear market, not financial advice. All right, the next piece of stablecoin news is Tether is making a major play in the US market, with the CEO revealing that the company is actively developing a institutional grade stablecoin tailored for banks, hedge funds, and corporate clients. This move, which was spurred by the passing of the Genius Stablecoin Act, shifts Tether's focus from its global retail product, which is USDT, to a compliance ready version built specifically under US regulations. Tether's CEO emphasized that it's well underway, signaling a strategic pivot towards a regulated financial infrastructure. This new product prioritizes transparency and robust reserves, targeting high volume use cases like interbank settlements, treasury management, and trading, areas that USDT doesn't directly serve. With Tether settling its sights on institutional adoption, backed by serious regulatory clarity, the stablecoin space is gearing up for a major shakeup. So finally, moving over to TradingView, let's pull out the Wyckoff analysis. So Chainlink is still trading in Wyckoff accumulation and in the process of completing its third LPS, which stands for last point of supply. In an LPS, market makers accumulate whatever Chainlink supply is left on the market before the eventual breakout to the upside. As you can see on screen, the second LPS, which bottomed in August of 2024, inside the blue Fibonacci retracement support area between the 0.618 and 0.786 Fibonacci levels. Fast forward to today, the third LPS also appears to have bottomed inside the blue Fibonacci retracement support area between the 0.618 and 0.786 Fibonacci levels. The most important update to the Wyckoff accumulation schematic today is that if we zoom in, we can see that Chainlink is currently testing the white Wyckoff demand trend line. Just for those of you that are new, the way to draw the Wyckoff demand trend line is to basically connect a trend line between the spring of the Wyckoff schematic and the test of the Wyckoff schematic, which leads me to the short-term analysis. So in the short term, we can see that this entire Chainlink rally since April 2025 has only been in 3 waves so far, topping out, or relatively speaking, finding resistance at the white 1-to-1 trend-based fib extension located at $19.46. Zooming in, I want you to pay attention to 2 pivotal Fibonacci zones. The first zone is between the 1.618 and 1.786 Fibonacci retracement between $17.43 to $17.62. If Chainlink has a sustained break below this level, the next support zone is between the 2.272 and 2.414 Fibonacci retracement levels between $16.52 and $16.72. These 2 Fibonacci zones should mark the bottom of this local downtrend before the next leg higher. If Chainlink has a sustained break below $16.52, then perhaps something more bearish is unfolding. So far, small bounce off the 1.618 to 1.786 Fibonacci retracement, but honestly speaking, nothing much to write about. So let's actually move over to the Elliott wave count really quickly. So I am still tracking a potential impulse being formed off of last month's low. As you can see from 1 to 2 episodes ago, our micro time frame yellow Fibonacci support area held as support, and Chainlink had a nice leg to the upside. The next support area for blue wave 4 spans between the 0.236 and zero point 0.5 Fibonacci levels, which range between $16.07 to $18.73. Just to make things super simple to understand, I issued out 2 simple conditional statements. If Chainlink breaks below $16.07, which is the lower bound of the blue Fibonacci retracement support area, Houston, we have a problem. That being said, if Chainlink holds the blue Fibonacci retracement support area between $16.07 to $18.17, then simply speaking, up we go. All right, so let's close this video off by taking a look at the Chainlink against Bitcoin valuation. So the last time we took a look at this chart, we talked about how the Chainlink against Bitcoin valuation was trading in a bullish compression fractal and that an upside breakout was imminent. Lo and behold, Chainlink has rallied against Bitcoin quite significantly over the past few weeks, but is now pulling back. If the white 1-to-1 trend-based fib extension breaks to the downside, which it looks like it's going to, we will most likely test the white 1.618 trend-based fib extension and the blue 0.382 Fibonacci retracement and pray to the cryptocurrency gods that these levels hold as support. As of right now, not much evidence of a local bottom being formed here on the Chainlink against Bitcoin valuation, but that's to be expected after Bitcoin dominance puked to the downside over the past few weeks. All right, it's getting pretty late and I have to get up soon, so thank you guys so much for watching, and I'll see you guys in the next video. Take care.